Hello friends, thank you for tuning in. Hope you're all doing good. So today I'll talk about a concept called as finding trap traders or essentially finding a trap move because once market moves against a trap position, essentially be it buyer or seller, we see a very large explosive moves to happen. Okay, so I'll give an example of how this played out yesterday in crude, one of the markets, and then we'll can extend the same concept to any other markets basically. Okay, so first thing is, on its own order flow, if you look at probably is just a tool of execution. What we need to know is what is the story building up, what is the theme around that, and then that increases the probability of that kind of a trade happening. Okay, so if you look at crude, what was happening is we had this day where crude cracked big time. Okay, the day before crude CAC big time, and then it tried to pull back, failed, and it was holding this range. Okay, so it is holding this lower range where we had a lot of volume yesterday, and then it was trying to hold this range also at that point of time. The volume was good. Okay, now so there could be two possibilities from these places. Okay, that market breaks this level and falls again, and else market sort of bounces off this level. Okay, it could be a straight bounce, unlikely, but it could be a bounce like this, which is a more likely possibility basically. Okay, now once that is happening, we also understand what is the key levels here. Now if you look at see, if you understand, right, our market follows a global crude. So global crude, this is a daily chart. In global crude daily chart, there was a key support levels here around 87 point 5 ranges, basically 87.5, 87 ranges. So we were at this key support level in global crude, which also acted as a driver for me to think that markets can sort of hold this range and can sort of trade out of this range. Okay, now having said that, our next plan would have been to see how markets react to this range itself. Okay, so we had this scenario where markets fell down and cracked and was holding below this level of 69, 80, 85, and then it immediately pulled back. Now this is where I come to order flow and try to make sense of what is playing out, and then increase our odds of sort of playing it in the market. And that's how we sort of really do it basically. Now, if you see, the key level here was 69.85 is the level that we were tracking. And what has happened is, if you see from here on, um, 80, 85 roughly, lot of selling was coming around this place. So if you see, the cumulative delta was about minus 200, minus 2, and then there was some buying attempt here. So then this is the area you really want to mark out and see what happens to this buying attempt. Okay, and then below this level 69.80, you see there were clearly a lot of sellers who were trying to come in and trade out of those positions. Okay, who were trying to really come in and trade out of those positions. We had one guy here. Okay, we had one guy here. Then again, large seller here, large seller here, large seller here. I'll just zoom in also as well for your reference. We had these large few sellers here, and then so we again sort of mark this range as a next reference. So what is our expectation now? If market has to crack this level, prices has to continue below this, and you have to see sellers holding on to this level. What happened immediately after is there was a lot of buy side activity. Delta moved to 130. Okay, and that is where, and all the sellers, if you see overall, my delta had significantly come down, but prices were not really pushing down much. So there was a sign that there is a limit bias sitting at these levels also, because this is close to 7,000, 7,069.50 levels. We would expect that there is a lot of logical support activities coming in here. So confluence of lot of factors which was playing out, and then we had this impulse buying activity getting outside this range. Now all you want is markets to take this level, last buyer here. Once it does that, what will happen is all those sellers who went in at these levels, either they were stop runs or they were trying to short the market, whatever could be, they would tend to exit once you are below this, above these ranges. Okay, for, and that is also back to this inside this balance range from an auction market point of theory. And once this happen, your immediate extension could be going back to the mid range, going back to the high volume node of previous sessions. Okay, and that is where this large move really played out. If you see, there was if you had an entry at a point where I think this was a pretty large move that played out eventually. because once you got into this 69, 30, 70,000 ranges, this played out like a 3% move or a 200-point move roughly. Okay, so this concept applies across all of things. So couple of things: build the picture of what is the overall larger scenario here, number one. Number two, look for sellers coming in, or in case of a trap seller scenario, look for sellers coming in hard but not being able to push through. So look for large levels that you want to track. Number three, once we also get into a balance, you wait for price to get into the volume balance. If you see in this case 69, 80, 70, 7,000 ranges, okay, that is a further confirmation. Then expect to markets to move really on the other side up. Okay, that's all.